Why don't we start off with the airlines? So United, again, one of the top performers over the last 3 months. What are you expecting when they report their earnings? We saw a relatively positive report when it came to Delta. Is that also a read for not only United, but the rest of the airline sector?
Well, it's definitely, I think, a good read for United. I'm not sure, and I think the market's really waiting to see whether it's a good read for the rest of the sector. What investors keyed in on Delta was the inflection in main cabin demand. So the challenge with the airline industry for this past year, which has had a really tough year in terms of imbalanced supply and demand, has been overcapacity in the main cabin part of the market. And we saw those trends kind of improve a little bit for Delta. We're expecting to see them also improve for United. The question is whether that really translates out over into the discount airlines, Southwest, Frontier, Spirit, which are all struggling with this overcapacity problem in the discount market. The difference, United and Delta have segmented their cabins, pushing down the amount of space that's available in their main cabin footprint, and as well are seeing some of those discount airlines move away from their hubs. So it's really going to be an interesting earnings season to see whether that domestic inflection is idiosyncratic to companies like Delta and United, who are really leading the group, or is more widespread across the entire industry.
You know, Dave, you're kind of talking my language. I know you're pretty tall, too. You got to pay for that extra leg room right now. And there's not a lot of it. You definitely got to pay for it.
Every single time.
I want to move on. You're mentioning overcapacity when it comes to discount airlines. I want to talk to you about undercapacity right now, at least when it comes to warehousing. Right now, we're looking at inventories for U.S. companies. It's pretty much close to the 10-year low right now. That seems to be weighing on a lot of different parts of the transport sector, specifically at J.B. Hunt, I would think, the biggest container shipper here in the U.S. The fact that we're seeing companies hold less inventory, specifically retailers, what does that mean for these earnings that are coming up?
Well, it's shown up in the volume trends, which is why the group has been weak, right? We've had, since probably about a year ago when tariffs started to become a focal point of the discussion, a lot of companies pulled forward inventory and have been shipping from inventory. They've been trying to push off the date at which they might have to go ahead and start bringing in goods at a higher price. And that's really why you've seen industrial production being a little bit positive, but freight demand still being pretty weak as we've gotten through the end of this year. All eyes are really on 26, 27 for the freight transports. Are we going to see what you'd expect to see with the Fed cutting rates, economic activity picking up? You mentioned a second ago, Stellantis building plants, all these companies that are building plants in the U.S., you've got to believe that there's going to be some freight activity that's going to follow that. So I do think that the transports have been on a very difficult ride over the last several years just because of the combination of the Fed tightening cycle plus the dislocations caused by tariffs. Now, if we start to move that in this slightly different direction, I think you've got a much better backdrop for demand to improve for the freight stocks.
Okay. So you see the potential for demand to improve, but you don't see that as being, you see that as being a 2026, 2027 story. I do want to talk to you about the administration, their effort to take about 200,000 non-domiciled CDL drivers or truck drivers off the road. Do you think that could be an inflection point when it comes to pricing and also just the capacity, back to the word capacity on the market? Is that a meaningful potential move when it comes to trucking stocks?
To me, I think it's a little bit more of a head fake. I think what you're seeing in that 200,000 non-domiciled CDL number, about 20% of those are inactive. Then when you start looking at the rest of them, a lot of those drivers are seasonal drivers for things like produce down in the border states with Mexico or Canadian drivers. And there is reciprocity under the FMCSA where each of the countries that are party to that agreement recognize each other's CDLs. So that non-domiciled number, certainly it's going to take some capacity out of the market. But of that 200, maybe it's 30 or 40. And in a market where you've got 1 million over-the-road drivers, it's helpful, but I don't know it's necessarily enough to go ahead and move the needle. What you really need to see the truck market starting to tighten up again is demand to start to strengthen. The market's been very balanced. Rates have been leaking up a little bit as supply has been rationalized, and the market truck rates are very low right now. Profitability is very low. Capacity is continuing to bleed out of the market. What you really need is a catalyst to push up demand, which is then going to get you into the next rate cycle.
One last question, Dave. Need a very quick answer. We kind of led you in talking about Dow theory. Is that still viable? Is that something that you think investors should still watch? The movements of the Dow Jones Index and also the Dow Transportation Index. Does that signal something about the broader economy?
Well, I do think it's I do think it's still viable, right? The idea that the market's going to take what the transports are going to move, what the market's going to make. I think we've again seen this really unique period of time. A lot of capital going into AI, chip development, things like that, where the freight content is relatively low today. over time, that'll get better as we're building data centers, as we're trying to power those data centers. We're going to need raw materials, commodities to go ahead and fill out that complex. But I think right now, what you've seen because of the dislocation of tariffs is a lag between the freight market following the broader market higher. The hope is that through policy action and lower rates and some of this reshoring investment that's going to happen, we'll start to see that freight activity pick up, and then we'll be in a better spot.